the whole banking is built on customers' trust, right? So how do you give them the trust? If you're able to give them complete transparency in terms of where your transaction is, what is the stage it is, where are we in terms of processing it, has it been completed? So you have in three-dimensional, I would say, right? Your enterprise architecture, your infrastructure, and then your application. So you need to have this observability platform if you really want a 360-degree view. We call it the customer static data, right? Because this data, you obtain it only once when you onboard the customer.
Correct.
Which, let's say, for example, I have onboarded a customer 15 years ago, right? I don't validate that data again, but I have migrated to a new core banking. I have come up with a new mobile banking. I have come up with an internet banking. So this data gets translated to different systems. You end up with something else completely than what the customer had actually provided. So I think this is where the data governance, data quality, I think you need to have a central team which manages that.
Welcome to a new episode of Observability Talk. Banking has undergone a dramatic transformation in the last few decades. Today, payment platforms enable the seamless movement of money, and banking is increasingly reaching every corner of the globe. In this episode of Observability Talk, I am excited to host K. Subramanian, a seasoned banking leader with over 30 plus years of experience, shaping the future of transaction banking, structured trade finance, and digital banking innovation. Subramanian has led multi-million-dollar businesses and transformed banking operations across Middle East. He was key in launching the UAE Trade Connect platform, pioneering transaction banking at the National Bank of Fujairah, and advancing corporate client onboarding and loan origination. Hi Subramanian, a warm welcome to you to Observability Talk.
Good morning. How are you?
Yeah, thank you so much. I'm doing great. So let's start from the beginning. You have been involved with transaction banking. Can you please explain what is transaction banking and how has it evolved over time?
Yeah. So transaction banking basically refers to the suite of financial services that it has got three verticals. Right. One is facilitating the cash management or the flow of payments, liquidity. That is one stream. The second stream is trade finance, which facilitates cross-border as well as domestic trade. And the third stream is security services. Over the last 10 years, what has happened is there is a fourth stream, which is basically the channels. The digital enablement is also part of that. So in cash management, primarily it is about liquidity, collections, payments, what kind of pooling structures you have depending on the businesses. It's basically about businesses, how do they manage their cash flow, how do they manage their liquidity, how they move funds within the country, outside the country, cross-border, payment solutions to their suppliers, collection from their buyers, those kind of solutions fall under the cash management piece. In trade finance, obviously, people are familiar with letters of credit, guarantees, various supply chain finance, cross-border, if they are like a big trader, commodity trader, there's cross-border trade happening across countries. So that predominantly falls under trade finance. And the third piece is the security services, like custody services, clearing, financial assets for institutional clients. So those are the three main streams. And over the last 10 years, what has happened is with digitalization coming in, it's the channels, how you integrate customer platforms with your platform, that has become a kind of a forte by itself because technology is also evolved over time and the customer requirements have changed over this period.
So if I say that this is more for businesses, not for retail sort of customers, because you talked about various type of services which are available for these customers. So it's more focused towards businesses. Is that summarization correct?
Yes, largely to businesses, but it is also used by consumers. It is also used by other financial institutions. It is also used by governments. So anybody who's got liquidity, like for example, For retail, it might be more simplified version, right? It could be like just having an account. I mean, let's say, for example, personally, we have 4 accounts. We maintain balances in different accounts. Investment could be, from a consumer perspective, investment could be in one account. His debt could be in another account. His, let's say, for example, demat in India could be with another account. So how do they manage the flow between that, their collections, their payouts, let's say the insurance premium? So it is also applicable, but kind of in a smaller version or a more simplified version for consumers as well.
And these applications, because obviously banks would have different applications to cater to each of these services. The way you are trying to explain it looks like that these applications also talk to each other, interact with each other to provide specific services.
Correct. So if you see, banking is kind of very archaic, right? I mean, it's a old business.
Right.
So typically, these services were offered independently to customers. But I think once we had the internet era, people want to bring it together. Like, I don't want to go to a bank to do just clearing or issuing checks with one bank or do my payments with another bank. So I want to kind of bring all of this together. So that's where the internet banking, I mean, if I just have to give you the evolution of transaction banking, pre-90s, it was typically paper-based. People used to come in, write a check, or people used to come in and write a payment request. Whereas if you see in the 90s and the 2000s, the last, let's say 20 years, a lot of digital payments, mobile banking, real-time settlement, instant payments, those have become very popular. And also corporates, when they had their enterprise ERPs, they don't want to get involved in coming to a bank's portal to do their payments, right? They want to do everything from their ERP. They want a connectivity to the bank's portal, which will then process the payments. So there are multiple solutions like host-to-host, API-based banking. So in the last 5 years, what has become quite the demand from the customers or the corporates or the customers is how do they do more quicker, faster, real-time payments? I mean, with other social media and all that, they get so used to these, kind of instant service things. So they're expecting banks also to kind of catch up with that kind of trend. The future is quite exciting, I would say. There's a lot of things that are happening. Banks are using generative AI for handling customer service. Earlier, it used to be call center, the conventional, back office handling all the queries. Now it is more Gen AI, more instant payments coming through. Banks are using a lot of data analytics to hyper personalize, make offers to customers. One of the recent trends that I'm seeing across central banks is the central bank digital currency. I think RBI has come out with that.
Correct.
A lot of central banks are coming up because what's happening is, apart from the consumer payments, there are a lot of bulk heavy payments that are made by governments, by institutions. For them, they need to come up, for them, the cost has to be low and the settlement has to be quick. And they don't want intermediaries, right? Because
Right.
if typically a company A has to make a payment to a company B cross-border, there are minimum of at least 2 or 3 intermediaries involved. Whereas if a government or a central bank is settling between two countries, they want it to be real-time, they want it to be low cost, because these are high-value payments, right? They want to see real-time credit. That's where these central bank digital currency or blockchain-based platforms become quite important. And that's something that is evolving. I think most of the central banks are kind of talking about it. The last piece, which is very useful for corporates, is the embedded finance, right? So you have a lot of corporates and fintechs working together.
Right.
So let's say, for example, if somebody is running a retail store for apparel, he wants to give a choice to his customer, right? So this will help them to do that. Similarly, buy now, pay later kind of solutions at the POS. So these are developing kind of technologies that are, trying to match what the banks are trying to do.
Yeah. So there are a lot of action happening on this fintech side of things, like you said, BNPL, and then there are a lot of other terms which has been coined in last 4 5 years with respect to what kind of services these banks and fintechs together can provide. These are very interesting. The way you talked about something from a 90s eras where everything was moved in paper to now something which is much more digital. People want things faster, better, maybe quicker in terms of the banking. The expectation itself has reached to a place that, okay, I want it now and I want it fast, right? So,
See, customers are actually comparing banks. Let's say, for example, my experience in ordering something over Amazon or streaming something on Netflix. The kind of user experience that they get in these platforms. They are expecting the banks to catch up and provide the same kind of customer experience. So I think it's important for banks also to kind of upgrade themselves and catch up.
very true. So, I can tell you for sure that in India, we are seeing a lot of action on this side, right? I mean, the amount of fintechs which has come out to provide some of these services, and the banks who is basically continuously upgrading their infrastructure, coming out with newer applications, like you talked about, right? That for corporates, for retails, and so on. How you have seen it in Middle East, because you have been in Middle East for a longer time, right? And you have been part of this whole banking journey there. How you have seen the evolution of these technologies or these sort of fintechs and services in Middle East?
So I think in the Middle East, the traditional banking has been prevalent till say about 2005, 2010. I think that's when the real digital banking, internet banking, corporates doing host to host has evolved. But I think one big advantage in the Middle East is even as the governments are trying to focus on these, right? So let's say, for example, whether it's the UAE Central Bank, they're focusing on real-time payments. They launched something called ANI. If I have to put a parallel, it's similar to your UPI in India, right? What they did in India. So they have that payment. Saudi has got its own Saudi payments.
Right.
All the GCC countries are coming together to do a real-time settlement because there's a lot of businesses that operate in the Middle East. There are a lot of government transactions that happen. So within the GCC, they are launching something called an AFAQ system. And like I mentioned earlier, the central bank digital currency, because there's a lot of settlement that happens between the GCC countries, right? So they are trying to roll out a central bank digital currency. Now, for example, UAE Central Bank has got a project called M-Bridge, which is basically a multi-currency, blockchain-based cross-border platform.
Very nice.
Right? So that is something that they have built, and it's going to come out very soon. So there's already a plan for how they're going to roll out. Similarly, I mentioned about BNPL on the consumer space, right? Which is buy now, pay later. That is becoming very popular over the last few years. And this place is actually being disrupted by a lot of the non-bank, fintechs. So actually, if you see, the fintechs are the challengers for banks. It's not banks competing with banks. I think more or less, if you actually look at various banks, whether it's the big banks, the tier 2 banks, or the smaller digital banks, right? See, the digital bank is more focused on the consumer side of it. So we have 3 digital banks that have been launched in the last few years in UAE, for example. Bahrain similarly has got a digital bank. Saudi has also got a few of them. So digital banks are something that is becoming very popular. They don't have any outlets. I mean, I'll give you an example, right? Some of the big banks in the UAE, they used to have 50, 60, 70 branches. Now they have all been shrunk. They have all become a digital experience center for customers. Right. So people are moving away from that typical branch banking to digital banking, mobile banking. So the banks are calling it experience centers. It's like a cafe. You go there, you do your banking stuff, you meet your advisor, whatever bank requirements. So it's not your typical bank setup. So that is something that is happening. And what we have seen also in the Middle East is there's a lot of fintechs that have entered this market over the last, let's say, 5 years, right? Whether it is relating to embedded finance for the SME space. See, because SME space, I think if you look at the UAE market or the Saudi market, SMEs play a very important role in the economy, right? There's a study which says about 50 to 60% of the local businesses are SMEs, and that's a contribution to the economy.
Right.
So some of these are actually being targeted by these fintech companies to serve them, right? Because some of them cannot avail, let's say, a bank financing. So the fintech companies are working with them to try and help them do, let's say, embedded finance or buy now, pay later.
Right.
The other important area where there is a lot of development in the Middle East is the regulatory technology. What I mean by that is anti-money laundering, sanction prevention. So there's a lot of focus on automating those activities, right? So like in my previous organization, we deployed a sanctions payment screening tool, which was based on AI, right? So we used to set up certain rules. Every payment, inward and outward payment, would get tracked. It gets flagged off if it matches a particular threshold, and then you screen those payments. So
right,
you don't have an army of people sitting back and reviewing every payment, right? So this is like, it throws out the false positives. You keep fine tuning the rules. So these are automated fraud prevention. And similarly, fraud prevention, whether it is, let's say, at the credit card level or at the account payment level. So those automations are also being, so the central bank regulations are kind of getting upgraded to bring more automation into this area.
Understood.
So two key things that are very, very recent is something called open finance. So the UAE Central Bank has actually rolled out a regulation on open finance. The intention of this is to kind of make a standard trust framework,
okay,
a consent platform, so that there is a consistent way of seeking consent from consumers. Second, making some standard API hubs so that the banks can use that. Basically, it's like an intermediary step towards getting into open banking, if you want to, put it that way. Right. Similarly, they also launched a local domestic scheme. Like, another example of that is similar to RuPay. So there's a lot of, similar to RuPay. It's called J1. This is the central bank domestic scheme.
Okay.
Now, they have the best part here is they do both the local domestic payment as well as they have tied up with people like Union Pay, Master, Visa for cross-border as well.
Okay.
So there's a lot of developments that are happening. And of course, things like UAE Pass, which is the digital identity, has been there for some time. So UAE Pass is actually used across all, it's not only banking, it's used even for, let's say, for your telecom connections, for your utility bills, immigration at the airport. So there's a lot of digital identity that is being used. So those are the focus areas or innovations, I would say. But having all this means you need to also have appropriate cybersecurity, resilience, and all that. So
very true. Very true.
That's where the investments are actually going in right now.
This is very interesting to know some of the things which you mentioned about, like digital banking. We have been hearing a lot about neobanks, where I do not have anything on my own, but I still provide all possible banking services to my customers, right? You talked about open finance. That is very, very interesting because the whole new era actually is era of APIs, right? People are basically connecting or interconnecting with almost anybody and everybody, which will help provide specific services to their end customers. So end customer being the focus, that okay, these are the services which I should be able to render to them. Let's figure out who should I interconnect or who should I talk to get those services and provide them.
And it's also important, the financial and the non-financial, how do we bring them together?
Very true. So these are some of the things which India has been trying, and that they are quite successful in some of them. uh, starting with UIDI, then UPI, then ONDC, then account aggregator. There are a lot of work which is happening with respect to financial inclusion at the lower most level, as well as cashless economy, like you talked about CBDC sort of thing. And I think the future looks to be very interesting from all these angles. Like how will it make people's life easier, simpler, and things will become uh, easily accessible to the lowermost in the pyramid, right? Uh, just taking this a little forward. So you have been during your tenure in Middle East, you have been involved in multiple digital transformation initiatives, right? So I just wanted to understand what are the top three lessons or challenges, if you want to talk about, you have learned over these years that you have done some of these very critical as well as complex digital transformation projects.
Right. So I just in terms of perspective, I'll tell you, I've been part of three core banking rollouts.
Okay.
Three in the last 3 decades. Three internet banking rollouts. So it's been, I mean, you know how core banking, how critical it is for banks,
Yes.
right? And banks are generally hesitant to kind of upgrade or change their core banking because it's like the engine, right? So they don't want to touch that engine. So what I've seen, there are three big themes I usually see. The first and foremost being how does the digital transformation align with the business goals of the organization, right?
Right.
It's important that whatever spend you do on the digital is actually aligned with the business goals. Like I mentioned about neobanks, is my focus on onboarding customers digitally. So then the spend goes into that. Is my focus on operating efficiency? So whatever is the business goal of the organization, it should be aligned with that. And along with that comes the sponsorship from the leadership, right? So that is very important as well. The outcomes, we should have specific KPIs, outcomes to be measured. Is it improving my customer experience, my net promoter score? Is that going up? Am I bringing operating efficiency? Like I have been part of one particular transformation where we brought down the direct cost by 70% for processing a transaction, right? So it's like 70% reduction in operating cost of a particular transaction. So if I look at a payment over the last, let's say, 8 years, the cost has come down by 70%. So that is all a kind of result of the automation. So these are kind of specific metrics or KPIs that the management would like to see, right? So also where we have seen it has been successful, the positive side of it is when leaders are engaged or when leaders are actually kind of championing the change and fostering this digital culture, the adoption is also heavy, right? Like for example, we've run several hackathons. The staff come up with ideas. The people who are doing the activities actually come up. Why am I taking 3 hours to do this activity? If I have this tool, I can complete it within 45 minutes.
Right.
For example, we did a implementation where it involved documentary, export document checking. This is typically the most manually intensive work that can happen in a bank, and generally banks don't. There are not enough tools to kind of automate this. So typically, what we have seen is there is hesitancy, but we actually kind of found a partner who could review this document. So, for example, what was happening is if a customer had submitted an export document under a letter of credit, the bank would typically take 6 to 8 hours to review the document and go back to the client on the status, right? If there is any discrepancy, if he needs to submit anything, we reduced it to actually 45 minutes. So one, the customer experience has gone up. So why I say that is the leadership, how the directional leadership is very important in how people within the bank come up with ideas, people within the bank kind of change themselves. There will always be resistance in certain pockets, but you address that through training, communication. That's the biggest thing. So business goals, business leadership is the kind of first lesson that is very important for any digital transformation. The second is being more focused outside, right? So what is the customer saying? What does the customer need?
Right.
Generally, what happens is, oh, I am investing so much cost. How do I improve the efficiency? Rather than that, look at, if I fill a customer need, can I scale up my business? Can I double my business? I mean, that's the kind of challenge. Again, it is tied into the first point that I said, the business goal and the business leadership, right? So customer focused. I mean, for example, banks are now competing with, let's say, the social media platforms, right? So we have to be nimble enough to see customer inputs, customer insights, what kind of data we can use, the customer transaction behavior, how do we use that, right? So those will significantly improve the way digitalization works within an organization.
Right.
This also, like, we have been part of a solution where we have allowed customers to co-create solution, right? We've made a kind of a MVP, showed it to customers. Customers give inputs to that, so they co-create the solution. What happens is, when they do that, they become very engaged. So you enhance the net promoter score from a customer perspective, which is very important for a bank. The last piece is allowing people to experiment, right? So typically what happens is, when there is a cost, people want to see what is the outcome. Am I able to reduce my staff cost? Am I able to reduce my operating cost? But sometimes it is also good to experiment. So allowing people to kind of do small experiments, then scaling it to a organization wide, that is what has been successful. So in cases where we have seen successful rollout of some of these ideas, is where we have taken a small pocket of an organization, tested out a minimum product, and then kind of scaled it across the organization. So what happens is, this then gets scalability, flexibility, you get interoperability between different solutions. Those kind of things come into play when you go to a wider organization-wide solution. So we should not just be just changing tech for the take of doing the technology or the digital transfer. Oh, I have a good OCR tool, so let me use that. But what is the solution that we are actually looking at, right? What is the problem that they're solving? So I think that is these are the three things. And the last important point is, digital transformation is a journey, right? You don't do a one-time investment and say, oh, now we are digitally transformed. It's a journey that continues across the life of the organization.
No, very, very true, Subramanian. One thing which basically really resonated with me was the first one, that you have to align everybody to what we are trying to achieve, because change is very painful, right? A lot of people generally are very not that easy to change, right? So until you really align people and get them into a single goal, it becomes difficult to implement some of these transformation initiatives. The second part which you talked about was very interesting, because finally the digital transformation is being done to make sure that customers get better user experience, or customers experience is better, or whatever we are delivering to them, it's something better than what they have been getting so far, right? So this is something which we have seen in most of our projects, where every digital first business has now started looking at how their end user experience is, right? And my next question is going towards that, in terms of transaction banking, right, and trade finances. These basically are playing very critical role in global e-commerce or commerce, right? How do banks ensure resiliency, real-time visibility into these applications' performance, transaction failures, maybe latencies, and the fraud risks, right? They have to have some visibility into these challenges. How do they take care of? How do they do it today?
See, so far, I mean, what I have seen over the years is the banks have been using conventional methods. So you have a app support team which is sitting like a control room, monitoring all the applications. They are the interconnectivity with the external, whether it is Swift or whether it is FedNow or whether it is the central bank system, subscribing to alerts coming from different system. So that worked. Getting notification from the central bank alert system or your own system. So that was the conventional method that the banks were using, And in terms of AML, like I mentioned, right? So recently last year we implemented a AI-based, machine learning-based platform, which was actually screening payments for sanction compliance. Similarly, trade finance payments are being screened for sanction compliance. So that actually gives you a dashboard. Let's say if I have 2,500 payments coming in, 2,000 have been auto cleared. These are the results. These are the parameters based on which they have cleared. So I have complete visibility over at what stage the payment happens. So there are tools that are being used. There are also big data analytics. So organizations which have a very strong kind of data governance kind of framework, they use a lot of big data, right? So they want to track the transactions, identify any failures, preempt them, forecast any potential delays. Now there are tools to credit is using it. The credit department is actually using it to see or predict whether a customer is going to potentially delay, right? So preempt those things, and then based on that take action, right? So it gives the entire, even though the transactions are happening in different systems, they are getting it. They get visibility across the various platforms to see how they can proactively take action on the customers. One of the important things on the payment side is end-to-end traceability, right? So very, very important for a customer is, I want to know if I made $1 million payment to somebody sitting in Africa, at what stage is it? So banks use platforms like Swift GPI to track where the payment is, especially when there are multiple intermediaries involved. It's important, they need to know, because what typically happens is customers use the internet banking, made the payment, then within 5 minutes he wants to know where is the payment, what is the status. So customers would like to know at each stage where it is, because at the other end, the person receiving the cash, he's got to release his goods, or he's got to release his cargo somewhere sitting on a port. So it's very important, they need to know. He needs to give the Swift copy, he needs to give the tracking, right? So that's where banks need to have that capabilities to share that with the client in terms of the traceability. So to achieve all this, you actually need to have your data points for each application easily accessible, have a repository, have a data catalog, data dictionary, build it properly. That's when you can actually use it for analytics, give it to customers. So I think this is really important from a bank's point of view, right? As part of the traceability or observability. Of course, with blockchain, smart contracts, this becomes much easier. It reduces the risk. It gives complete visibility and interoperability as well, right? So you have this standard kind of protocols. Then, so today what happens is my core banking system is different. Another bank's core banking is different. So having the same set of protocols so that banks tap to each other, which is why the initiatives like CBDC or Swift GPI becomes very important.
Right. See, you talked about some of these monitoring part, right? And then becoming a little proactive and predictive. We have been seeing a lot of enterprises are moving away from this reactive monitoring or threshold-based monitoring, we generally call it, to something much more proactive observability, right? Just wanted to understand your experience with observability, and if you are looking for an observability platform, what are the things which you will look at in that platform?
See, I think if I talk from a bank's perspective, right, the customer's trust is paramount. And how will the customer? I mean, the whole banking is built on customers' trust, right? So how do you give them the trust? If you're able to give them complete transparency in terms of where your transaction is, what is the stage it is, where are we in terms of processing it, has it been completed, right? Now, in a digital environment, let's say, for example, if you order something on Amazon, you exactly know where it is, right? So similarly, when money moves, the customer wants to know, if I've given my instruction, where is it? At what stage is it? Is it the bank? So, and banks also do a lot of internal processes, right? So customer doesn't have any visibility. It's like a black hole. If I give a request, when I get my advice, I know the transaction has happened. But in the intervening period, how do I give alerts to customers? How do I give so for that, the organization needs to be kind of ready for that, right? Today, the banks, if you look at the bank's whole enterprise architecture, it's built across multiple legacy systems. They would have started with the first core banking, then they would have built some applications for various products, then they built various channels, and then they brought it together. Now, when you have this web of systems and applications, that's where traceability and observability becomes extremely critical. And I think most of the banks are relying on a strong middleware through which they build integration, whether it is flowing from the core banking to another application or coming from an external channel. So it becomes very, very important. So observability is very critical. The banks are basically adopting, or organizations are adopting it to obtain real-time insights, health of systems operating, because where are they in terms of performance?
Right.
Second, to detect any anomalies.
Correct.
It also helps decision making, right? So if there is an intervention required, can I do it proactively, right? So the traditional tools were application specific, whereas we need to have full stack observability, something data driven, AI driven, distributed tracing, automation to check the health, having heat maps, which one is doing well, because the architecture is quite complex. So each one has its own ecosystem, but then and now some have on-premise, some have cloud, some have hybrid. So you have in three-dimensional, I would say, right? Your enterprise architecture, your infrastructure, and then your application. So you need to have this observability platform if you really want a 360-degree view.
No, I think. Sorry.
So I think proactive issue resolution, that's one key reason. Very little downtime. I don't think banks can afford any downtime. And quick incident response.
Right.
Of course, we spoke about end-to-end visibility across distributed systems.
Right.
Last but not the least is the cybersecurity and regulatory compliance, right? Data integrity, data privacy. I mean, Central Bank of UAE does a resilience audit on every organization, right? So they monitor this very clear, very closely. Real-time security monitoring. Do you have audit trails? Do you have automated systems?
Right.
What is the kind of resilience? Very interesting. Central Bank actually sponsors a kind of yearly war games on cybersecurity, which is, I've been part of many of them, and it's quite interesting. So sometimes what happens is it's not just banks talking to banks; they actually get an external organization to come and kind of assess it as well. So, so it is a clear focus, proactive issue resolution, end-to-end visibility of various systems, and enhanced cybersecurity compliance. I think that I would say are the three reasons why, banks are looking at observability.
Yeah. I think you are bang on. What you started with, I still feel that is the North Star, the customer trust. And when we looked at this customer trust part sometime back, there are three separate words you used in different sentences, and that is the framework we create. We call it View OTT framework. O stand for observability, first T stand for traceability, the second T stand for transparency. So I think you summed it up quite well in whatever you talked about a few minutes back, on why each one of them are very critical to the digital first businesses. So I think we both are in quite a sync in terms of why it is so critical, right? I want to talk about the second part which we touched upon early on. We basically have been discussing, right, that the whole banking application infrastructure is becoming complex. There are a lot of fintechs which has come in, which is providing different services. these banks are and fintechs are interconnecting with each other using these API calls, but still it is banks' responsibility to make sure that their customer has the best user experience, right? So what do you do? How do you ensure as the banking person that you are still able to deliver the best user experience while there are so many moving parts?
So I think this requires a very kind of a structured approach, right? Starting from governance, the framework around how these should operate.
Right.
Second is the integration with various external stakeholders, and the third is monitoring. So I think some of the things that we can do, the best practices which I feel are best practices that we can implement, is actually having establishing a clear kind of API design standards. You can follow industry standards like Swift API or ISO 2002. Even have a versioning for APIs, right? Whenever you do an update, typically what happens is, if you don't do a versioning, uh, when the so what happens is, initially you connect with APIs, but then when you upgrade, let's say you've rolled out a version upgrade on one of your tools, you don't publish those updated versions, right? So it's keeping a kind of a versioning of APIs, using a robust API security and compliance framework,
Right.
for because from a banking perspective, the secure communication is important. I think that is why this becomes very important. Whether it is role-based action, role-based access control, uh, a strong testing framework, using API gateways to monitor the performance, detect failures, set up real-time logs, alerts. Like we use tools. I remember we used to use tools like Splunk, Datadog, to actually track,
Right.
in terms of how we are. Even having a kind of a rapid response team, right? If there is any slack in SLA, have that kind of an arrangement, right? Uh, Dedicated support channels. So especially when you work with vendors, it is important to kind of set the framework, set the standards. So if there is a new vendor for, let's say, internet banking, these are my standards. These are how I expect you to kind of uh, follow. I mean, I've been involved in certain RFPs where we've actually asked the vendors to kind of say whether they meet these standards,
Yeah. So
right?
SNA.
We score them on those standards because
Right.
they need to be robust as well, right?
Right.
And of course, the last important thing is having your own redundancies, fallback APIs, having a DR. Uh, those are also critical. I think these are some of the kind of best practices, if you want to call them, when you have such a complex interconnected API kind of a situation. I think this is very important kind of framework to follow if you really need to have a smooth, secure, and reliable experience to the customer, right? They don't want to see downtime. They don't want to see a blue screen. They don't want to see, they're not able to process their payments, or they don't have. Customer is not going to worry if your API is dropped off or your middleware is not working, right?
Right. Right.
So I think these are some of the things that we should keep in mind, I think.
No, that is very true. I think you have touched upon all the right parts. Uh, I was basically looking at more from the SLA perspective also, because what really happens is that this is something which came up in our previous Observability Talk episodes as well, where people talked about that, like you said, versioning has changed, and because of which the API responses has changed, right? Second thing is that until you define a very strict SLA, people on the other side may not conform to what responses you are looking at, because your response to your
So that's why. So when we do our so one of the things what we do is, when we do the RFPs, RFIs,
yeah,
we actually say this is our SLA, right? This is
right,
how we expect to do.
right,
And the other important thing that we do is, we do kind of a 6 monthly independent audit on the vendor,
very nice, right, right,
right? So we do kind of a mystery shopper or an external audit on the vendor to see how the SLA functions.
Very nice.
Right. So the customer say, I mean, the vendor might say, okay, it's 3 seconds, it's 5 seconds, but we actually test that. And what we also do is, there are also sandbox environments, right? So sandbox environments is something we can use. So I have seen in a few projects where, not in our organization, but in other organizations, where you actually do it in a sandbox environment to actually test, to see as part of the vendor onboarding whether they can actually fulfill the SLA that we are expecting, right? So like for example, I'll give you a example, right? So when central bank did the instant payment, they wanted a particular response time. But if you do your uh, payment screening, sanction screening algorithm, you will never be able to fulfill you'll not be able to send the response to the central bank within this time. So we had to work around that and see how we can meet the central bank's SLA, right, in terms of instant payment. Like, for example, they said, I think within 15 seconds, you need to give an ACK or an ACK. Right. So that is critical. I mean, SLA is paramount, right?
Correct.
Especially from a customer's perspective.
Very true. We early on you talked about the overall evaluation, and then we talked about GenAI and others. We are also seeing a lot of organizations, especially banks, embracing this AI and automation. Right.
Right.
What advantages or benefits you have seen from automation, especially in this transaction and wholesale banking space?
So for example, I'll tell you, in one of my previous organizations, we had payments, right, both inward and outward, were completely automated. So 95% of the payments in the organization was straight through. So there was no human intervention. We handle thousands of payments in a day. Only 5% of the payments were actually requiring manual intervention. So what was happening is, let's say, for example, if the customer is expecting money, by the time they open at, let's say, 8 o'clock, the money is already credited to the account. He doesn't need to call anybody, right? He's already seeing the visibility. So you can utilize the funds. Maybe in the good old days, he would have seen the funds at 4 p.m., right? So he'll not be able to use the funds. So there's a lot of advantage from a customer perspective.
Right.
Second, when it is automated and when it is straight through, there's very little error, right? So you don't have to do like a follow-up Swift message to rectify the payment, or the amount is incorrect. We don't have to do that. It's straight through. Whatever has been put in by the client just passes through. It gets validated. There's no manual intervention. So one is, from a customer perspective, it is the response time of seeing a payment going through quickly. Customer is able to see the advice. Second is, from a operating efficiency perspective, the cost, like I mentioned earlier, right? We were able to reduce the cost by 70% in one of the organizations. So 6 people were doing that activity. We reduced it to 1 person. So
Right.
all that is required is somebody looks at the reconciliation report at the end of the day, the beginning of the day. If all the payments that have hit the system, have they gone through? That's all it's required. And if there is any escalation, obviously it gets immediately, there's a dashboard where it gets escalated. So I think that is the biggest advantage. Second is, using tools like GenAI. You don't need to deploy a big call center. You don't need to deploy a big army of service representatives. So the representatives are then addressing value-added questions, cross-selling products, understanding the customer needs, the requirements. So you're actually doing some value-added service to the customer. So automation, one, improves customer experience. Second, efficiency, and the third is, more importantly, the scalability of those solutions.
Right. And have you also looked at automation on the IT operations or monitoring or observability side?
Yes. So there have been tools which we have looked at. So one of the things that we wanted to also do that is, because of the integration, because of the various connectivities with external systems like Swift or central bank systems, we have kind of considered that but I don't think we've been able to deploy something which is entire enterprise wide.
Okay. Okay. So some sort of POCs have been done, but the deployment is still to be.
Correct. So it's a journey, right? So
Nice.
banks are also introducing new applications, so it's a journey by itself.
No, that is very true. See, when we are looking at some of these large enterprise customers, right? That, like you said, they are basically also looking at how do I reduce by, let's say, MTTD, or how I reduce by MTTR, right? So that I can find the problem faster, but at the same time, I also am able to resolve the problem faster. So for that, people have been started pushing for more automation. If there is a problem which is something which is recurringly happen, right, and then they know exactly what the fix is, that fix can be automated, right? I'm more talking from the IT operations perspective, which is basically
Right.
can be attached to an observability platform, where observability does the platform does the monitoring part of it, figure out that there is a problem happening, and then invoke certain automation which remediate the problem from that perspective, right?
So I think today in the the IT ops support team spends a lot of time in identifying the root cause analysis, and such a platform will actually kind of resolve that MTTR time, like you rightly mentioned.
Right, right. This is something which I ask almost everybody. Uh, how excited are you about this Gen AI or AI phase which is coming into the banking environment now? What use case you already talked about? Is there any wish list you have? Oh, I could not solve this problem earlier, but with maybe Gen AI, I will be able to solve those problems.
So we there are see we have looked at, so we had actually before we did the customer service one, but we had actually looked at 3 or 4 use cases, right? One of the use case was for example, there is a standalone platform from which data is required to be input into the bank system, and then you generate a certain report based on which certain action is taking. Now, earlier it was like manual activity. Somebody had to log on to a platform, download the PDF document, extract the data from that,
Right.
input it into the bank system, and then do it. So, with the problem is that's an external portal, right? So we were not able to deploy any RPA or anything to extract the data. So they were blocking the RPA. But with this, we were actually able to do that, right? So Gen AI kind of you create a persona which can log into that portal, extract the data, extract the PDF. So there are several use cases we looked at it,
Right.
but because we wanted to come up with something that is quick, just to test whether it works, we went with this customer service thing. But I think there are, you can look at hyper personalization, you can look at cross selling, you can look at customer PFM. There are several use cases for Gen AI.
Very nice. Very interesting.
I mean, it is. I think it's very difficult to crack. It takes a lot of time and effort. See, the most important thing is it's easy to identify the use case, but getting the internal data ready, right?
Right.
So which is why the data governance become extremely important. Now, I have come across situations in several organizations. You will have 2 mobile numbers for the same customer in 2 different systems. You have addresses for 2 organizations. Is the same person in different, one in your core banking, one in your BPM, or one in your processing system. So you need to get the data framework right, single source of truth right, before you can actually efficiently deploy Gen AI. I think that's the lesson. If you ask me what is my lesson learned from Gen AI, that's my lesson learned.
Very, very interesting. In fact, this reminds me one discussion I was having in one of the event with set of people, and they were talking about the most uh, incorrect data which is available in banking systems today is the person's name and date of birth. And I was like very surprised because, and the person also gave an example. What he said is that I have my date of birth is 4th April, sorry, 4th July, but it has become 7th April in the system. The DDMM has become MMDD, right?
Absolutely right.
So the getting
what
the
happens
data
is
is very important.
Correct. So especially the customer, we call it the customer static data, right? Because this data you obtain it only once when you onboard the customer.
Correct.
Which, let's say, for example, I have onboarded a customer 15 years ago, right? I don't validate that data again, but I have migrated to a new core banking. I have come up with a new mobile banking. I have come up with an internet banking. So this data gets translated to different systems. You end up with something else completely than what the customer had actually provided. So I think this is where the data governance, data quality, I think you need to have a central team which manages that. That becomes very important from a scalability perspective.
Yes. Thank you so much, Subramanian. It is very interesting to talk to you. Before I let you go, one final question, which is something which I've been asking to get some good view into what people read. Can you please talk about your favorite book and how it has inspired you?
Yeah. So my favorite book is The Power of a Subconscious Mind by Dr. Joseph Murphy.
Okay.
So it's a very interesting book. Whenever I need some inspiration, or some new ideas, I go back to that book. If you ask me, if it basically tells you that you can be the person you want to be, right? We have the power in ourselves. So you want to be a negative person, you can be a negative person. If you want to really seed positive thoughts, bring in some harmonious things, you could actually, kind of come up with different ideas. So if you don't have a harmonious and a positive thought, you can never come up with the creative ideas, right? So that is very important.
Right.
The second thing that is interesting is mindfulness. So typically what happens is we are not mindful at all. So self-observation, how do we react in certain situation, being mindful of how you react, it actually improves self-belief.
Very true.
Right? It also kind of helps people to believe in the can-do mindset. So mindfulness is very important. The other thing which is interesting from that book is visualization. So when you're doing creative stuff, right? So these are things when you're building stuff, visualization is very important. So sometimes what happens is when you have that mindfulness, you are able to visualize things. Right? It gives you the clarity to visualize things. You're not kind of, the noise doesn't worry you.
Right.
The last important piece is, pursue anything you pursue should be for a greater cause, right? Getting people along, right? That's very, very important. Steve Jobs could be an example for that, right?
Correct.
So I think that's why I find that book interesting. So, every time I read it, it gives me a different perspective, new perspective. I get new perspective when I read it every time.
Very nice. That's interesting. I have not read it. I'll definitely put it on my to-do.
It's a great book
to read.
Or you can read any book of Neville Goddard. These are like, interesting books where it'll give you a different perspective.
Yeah. As people say, right, it's all in the mind. Once you decide to do something, you can actually, if you believe in yourself.
Right.
Very nice. Thank you so much, Subramanian, for your time. Really great insights. Very good talking to you. Thank you so much for your time.
Pleasure as well. I enjoyed this session. Thank you very much.
Thank you for tuning to my conversation with Subramanian. If you found this conversation insightful, please consider sharing it with your colleagues. If you are interested in learning more about Subramanian, check out his LinkedIn profile in the episode description. For more information about ViewNet Systems, please visit us at www.viewnetsystems.com.